And please do ask your questions during the webinar using the chat function, or raise your hand if you would like to speak. And as usual, do send your tech issues to Emil Kjellqvist. So as we are experiencing the fastest transformation, I would think, in our lifetime, in most aspects of life, really, we're all looking for answers and clarity going forward. And I think we're all foreseeing rather change in the way that we work and how businesses are run and how the general map of businesses will look in the future. So on that note, I have the great pleasure of introducing to you today Lan-Ling Fredell, FinTech and Innovation expert at PA Consulting. So going forward, how do you become the winner, and maybe foremost, who will be the winners, FinTechs or banks? Lan-Ling, the floor is yours.
Great, thank you very much, Christina. It's super pleasure to be here, to be able to present some of our insights. We at PA Consulting, we are big believers in technology to bring positive change to the world. And so you might think that the answer to the question would clearly be FinTechs, given that. But many of our clients are in fact banks, and what we try to do is try to give them advice on how they can also transform to, if you will, the threat of FinTechs, if it is in fact a threat at all. So if to give a little bit of background to why we did this study, we're sitting here in Sweden, and Sweden is one of the most technologically advanced countries on earth. We have a very digitized society. We are probably going to be one of the first countries to be cashless. We have some very, very prominent, well-known unicorn FinTechs. And so you would think, okay, FinTechs are clearly winning here in Sweden. But we also have a situation where we have 4 large banks, and these 4 large banks have a market share of about 70%, and they have had that for some years, and it doesn't seem to be moving that much. But what is happening right now is that, or I should say previously, FinTechs have really been very niche, right? So they've gone for one particular sector, Klarna being a good example of being in the payments area primarily. But we see now that the playing field is tilting a little bit, and we have these kind of so-called neobanks coming into Sweden, often from outside of Sweden. So we've got Revolut, which is UK based. We've got N26, which is from Germany. We have Lunar Way, which is from Denmark. So we're having some challengers who are really hitting kind of the core proposition of a bank, of a universal bank, which is, you know, their current account and their retail banking business. And what we wondered is, it's clear that, you know, banks are nervous. We've seen a flurry of activity in the market, you know, banks investing in different FinTechs, and the banks really investing in their apps, for example. But we were wondering, you know, are consumers just kind of waiting for these FinTechs to come so that they can leave their banks, or are they happy with their banks? You know, what do they want? What do they want from their banks? And we didn't see anybody asking the consumers, and so we decided to ask them. So that was the beginning of this study. And before I go into it, whoops, let me go back here. What we did was we decided, okay, we're going to ask the consumers what they want, and we kind of went for a 3-pronged approach. We went out and we just started interviewing people We did some focus groups, and finally we did some surveys to try to get a handle on what consumers are thinking about banking and how happy they are and what they want. And so the first part of my presentation will really be to show you what they said. And so I'm going to not talk so much. I'm going to actually let you listen to what they said. So we're going to have a lot of video in this presentation, and it's a little tricky to do that here via Zoom, because clearly depending on your bandwidth, you may not get good video, but there are subtitles, so I'm hoping that most people will be able to, if not see and hear the videos well, that they can at least read the subtitles. So it's a little bit of an experiment to see how good people's bandwidth is at wherever they are. So I hope that comes out well. And then the last part, we'll talk about what we here at PA think banks should do about these things that customers want. So let's dig right into it. So, the first thing that we could address right away is that, of course, customers aren't interested in banking. I mean, and it's hard if you're a banker like I am. It's hard to imagine that people aren't endlessly fascinated by finance, but in fact, they are not. What they want is they have goals in life. They want to get good deals. They want to buy homes. They want to buy cars. They want to make sure that they save for the future. They have these goals, and banks are just a means by which a necessary and maybe sometimes not so pleasant means of getting what they want. And so they're not at all thinking really about banks. So let's hear what they say.
Han ringde faktiskt upp rent proaktivt. Han såg på mitt sparande och sa att den här fonden, den har gjort sitt, du borde byta, och det var ett jättebra råd.
So here we're hearing that this proactive advice, an advisor saying you should buy this fund and help his savings goals. So that's what this man wanted.
Jag tycker så här, ekonomi som det är svårt, så men liksom så här, kanske ännu lättare att få så här, unga personer att förstå.
Men det största motivationsfaktorn för att byta är ju bolånet.
So if you go through our study, it's very, very clear when we ask people why they were with their bank or what would make them switch banks. It's fees. It's things that hit their wallet. So if they were going to buy a house or a car, and they were going to get a good loan, or they were trying to invest and they felt they were getting a good deal on their investing, these are the kind of big ticket items that would make people switch banks. So it really wasn't about did they like their bank, or even if the app was good. They wanted the app to be good, but what they cared about were their goals, i.e. their wallet. That's not really super surprising finding, but it's good to repeat, because sometimes, especially if we're really into technology, we start to overemphasize what the importance of technology for the customers, when the customers are really still interested in these core banking things, their loans, their insurance, their savings, and increase in wealth. The next finding we had was that consumers, they want insight. Finance is hard for most people, and so they wanted banks to help them understand about themselves. And they want someone to educate them, to teach them. They want advisors who actually advise them. So here's what they had to say.
Vad vill jag ha statistik på? Varför är det viktigt för mig? Och jag skulle tycka det var jättekul att få se hur kan gå ner i hur hållbar är jag till exempel som person. Alltså utifrån vilka val jag gör. Att skulle kunna gå ner i varenda liten detalj egentligen.
Om de nu vill ha sådana personliga bankmän eller kvinnor, då ska de ju vara personer som är intresserade av mig och inte av dem. Annars kan de verkligen strunta i det.
So here, you know, we saw, like, for example, one of the big things that almost all banks have implemented in the last, say, 2 years are categorization tools. And by and large, you know, people weren't really impressed with that. It was sort of interesting for like a second, but it wasn't really helping them. It wasn't really giving them insight. It was just sort of information. It wasn't helping them really do anything substantial. And so they really want more guidance than just information. The next thing is it was very clear that people wanted to have it easy. And so they wanted everything in one place. So if they have to go into 5 different apps, that's harder. I mean, people don't want to spend a lot of time actually on their finances. They're busy, they have other things to do. So they want to see everything in one place.
Så om vi får designa vårt eget kund eller vårt eget banktjänsteerbjudande.
Allt på ett ställe.
Allt på ett ställe. Det hade varit en dröm.
Yeah, so I mean, this quote was so brilliant. It was just like everything in the app. It was almost as if we told them what to say, which obviously we didn't, but it was really fun to hear it. And we saw that confirmed over and over again. So this idea of a universal bank, it's actually a really, really good one. And banks have that leverage in that they offer all the products and they can give it to their clients all in one place. The question is, of course, how well integrated everything is so that really you are getting it in one place, or are you having to open different apps or go to the app in one place, go to the internet site in another place, or maybe go to the branch. So if you're having to go to different places to get your information, then it's really not all in one banks and all in one place, and you're sort of losing the benefit of this universality. Finally, it's of course making things easy for people. And here, banks, I think, are lagging a bit behind all of the other kind of more digitalized services we have. You know, Uber made, you know, getting taxis super easy. Klarna makes buying stuff off the internet super easy. Amazon has completely changed the way we shop, not here in Sweden, but we're going to see that soon as Amazon comes into Sweden. So we're having customers base their expectations on other areas in their life, and then they want to see that in their banking life too. And one of the things that is difficult for banks is because banks have so much regulation and compliance, which almost goes against the make it easy. So banks really have to work twice as hard in order to make it easy for their clients. But I mean, their customers, they don't care about this compliance stuff. They don't think about it. They just think there are barriers in the way of me getting what I want to get done fast.
Jag tycker appen är rätt bra för den är väldigt minimalistisk. Liksom. Du kan kolla, här är dina transaktioner, här kan du se ditt kort och här. Väldigt simpelt. Jag tycker den är ganska bra. Det behöver inte vara så mycket mer komplicerat än så.
Och att du ska inte behöva gå in i en FAQ för att få tag i frågor och svar på frågor. Utan det ska verkligen vara liksom beräknat vilken fråga är det som vi behöver svara på när den här vyn visas eller vad det nu kan vara.
And then finally, customers have all sorts of wishes. And their basic wish is they want to do what they want to do the way they want to do it. And sometimes when we design things, we design it thinking that there's like this one person who is the universal person. But there isn't. Everybody has different expectations. So someone might love doing everything in the app and never want to go to a branch, but other people maybe like to go to a branch. Some people want to call up customer service on the phone. Others might want to do a chat on the internet. And so more and more, consumers think that they should be able to do it whatever way they want. And we see this in banking too. And this can be really difficult because you have to enable customers to do it anyway, not just the way that is maybe most convenient for the bank.
En sak som skulle få mig jävligt pissed off är om all information helt plötsligt var YouTube-klipp. Ja! Det finns alltså ibland man är ute och så vill man ha information om någon produkt eller någonting sånt där. Och så har de bara en massa filmsnuttar. Och det tar ju 17 gånger så lång tid att titta på en filmsnutt som att scanna igenom en text och hitta den informationen jag vill ha.
Nej, men något som jag stämmer på när det gäller just så här kundservice automatiserat med så här AI och bottar och sånt, det är att den inte är träffsäker för 5 öre. Nej. Alltså i 99% av de gångerna jag använt det har det alltid varit fel svar. Ja. Alltså när man skriver in till sig, jag behöver hjälp med det här. Jag kan inte förstå vad du menar, kan du ringa kundservice? Alltså, det är alltid så, det funkar ju inte. Så att det är så här, då vill jag hellre ha någon som jag kan ringa eller som jag kan chatta med.
Eller en riktig person man kan
Ja, som jag kan chatta med, precis. Man vill ändå kanske ha någon som man alltid kan fråga.
Ja.
Here, we see a lot where some of the things that kind of come into vogue, like an AI bot, chat bots, putting video clips instead of having things in plain writing, they can be good for some people, but then not good for others, especially when that service isn't that good. So it's really great that banks are trying out these kind of things, but if they're really limited, then maybe banks are spending money on kind of little bells and whistles on the side that really aren't actually helping customers. Finally, we really see that people really want personal service, whatever that might mean. And they mentioned things like following up. They want to talk to people, and very much they say they want help. They don't want to feel like someone's trying to sell them products. So if they get these things, if they get a feeling that they're important to a bank, if they feel like they can talk to an actual person who is invested in helping them as opposed to selling them products, that really drives loyalty.
Jag kanske är lite cynisk så att jag försöker att prata med mina föräldrar först för att känna att de vill inte sälja mig saker.
De personliga mötena med att gå till sin bankman, att gå in på sin bank, alltså gjorde att man absolut inte kunde tänka sig att byta bank, för det var ju som att jag skulle lämna Anders på bankkontoret där och gå till någon annan vem gör så?
So here we see the dichotomy here. We had a lot of respondents say that the first person they go to for financial advice is their parent, and this was actually true among middle-aged people as well. It was for young people. So people trust their parents, but we also had a lot of people talk about how they felt like bank advisors were just salespersons, and then they weren't really interested in talking to them. But if they got a person who they really felt were advising them, then they will never leave. Who would leave Anders? And so that loyalty, when you really hit the right note and making people feel like you have their interest at heart, that's pure gold. It's invaluable. So then we got around to actually asking, would people want to use a FinTech? And here we were a little surprised because while people were open to using a FinTech, they were quite clear that if there was a bank behind the FinTech, they were much more comfortable using them.
Ja, men absolut, om det är bra integrerat och sen att man också känner sig trygg.
Det är uppbackat av en bank på något sätt, eller att det är tydligt att det liksom är ett initiativ av något som faktiskt är en riktig bank. För jag gillar inte riktigt känslan av att det här är någon form av mellanhand mellan någonting, för att på något sätt så måste de ha kapitalet eller pengarna liksom så, till att skapa de här tjänsterna.
So here we can see that, banks, for their good and their bad, people by and large trust the security of a bank. And this is something that banks should absolutely capitalize more on. So if we sum up, we say, what do customers want? They want a good deal. That's what they want. So they absolutely expect things to be digital, but they choose their bank based on the value for them, and that's the money in their pocket kind of value. And so it's maybe not surprising, but it's, I think, a good thing to remember, because we're so enamored sometimes with technology, we kind of maybe forget our purpose. So if we're looking at this and we're looking at all of these things that customers expect from their banks, you can't do everything all at once. So, so what should you do? How do you prioritize? And there's another aspect with technology, because if you're a big bank, do you focus just on lowering all the fees because that's what people are telling you they want? Or do you kind of ignore that because you think, well, people aren't maybe financially savvy, maybe they don't really know what they want because you haven't shown it to them. If you think about Apple and Steve Jobs, he was famous for saying, people want what I tell them they want, because he was such a pioneer. People hadn't even thought of the things that he was thinking of, so how could they say they want it? And so this is the difficulty with innovation, because on one hand, you need to give customers what they want. You need to ask them, you need to hear what they're saying, but at the same time, if you're innovating, maybe you're so far ahead of them that they don't even know that they want it. And so it can be really, this is the dichotomy of innovation. So, we like to think about prioritization. You never have enough resources to do everything all at once. So you always have to decide, what am I going to do first? What's the most important thing for me to do? And so when we look at all the different kinds of features that people have in their banks, then, if you find ways to categorize those features, that can help you decide your prioritization. So we have kind of come up with 4 categories. So first is hygiene. So hygiene things are things that are absolutely essential and they're expected by customers. They're not going to make customers happy exactly, but if you don't have them, they're going to be unhappy. Then you have the nice to have things. So these can be lovely little additions, but they're not going to make you change banks for them. It's like, oh, that's nice, and then you're done. Then you have value drivers. So these are substantial things that really affect a customer's wallet. And then finally, you have delighters, things that make customers really happy and foster loyalty, and they just think, wow, that was amazing. So if you look at then different kinds of features, and here we just kind of mapped out a selection, so this isn't trying to be exhaustive, but if you look at hygiene, right, having digital onboarding, messaging in apps, having application forms, digital application forms, I should say, in the app, pre-filling as much information as you can. All of these things are essential. Customers just expect that, and when they don't get it, they're annoyed. Nice to have things could include things like CO2 calculators. That's been a big thing just lately. A lot of apps are offering that, like cards, for example, CO2 cards. And yeah, they're super nice. I'm not saying that I wouldn't want a CO2 calculator, but I'm certainly not going to change my bank just to get a CO2 calculator. Spending categorization comes into that category. savings goals. Again, great thing, but if it's really manual and you have to create the goal, then you can easily set up savings accounts. So it's not something you're going to switch banks for. Value drivers. So value drivers are competitive credit pricing. I mean, that's the number one thing. Let's be real, right? Low interest rates on mortgages, car loans, etc. These are the things that are going to make people switch banks and choose your bank. Other things that do that are like rewards for loyalty. And maybe very specific financial products that are designed with specific needs. And I think, and the reason why we think this is really important is because there's a lot of technological innovation out there, especially with FinTechs. And there are, of course, FinTechs who are offering low rates for loans. That's pretty standard as well. But we don't see that much product innovation. We don't see people trying to figure out new financial products that give customers something that they couldn't get before. By and large, the products out there are like pretty vanilla, standard kinds of financial products. And so when we talk about innovation, it's not just technological innovation. We can have product innovation too, financial product innovation. And then finally, we have delighters. And so this is the trusted advisor. I mean, if you can have a trusted advisor, you have a client for life. And the great thing about the delighters is that if you've delighted a person enough, they maybe are willing to pay more. So then you can maybe charge a little more for your mortgage loans, and they're okay with it because the feeling of safety and security, having this person advise them, and the peace of mind they get is worth more than a few basis points off of their mortgage. So these two things, value drivers and delighters, together are super valuable. So if we think about like kind of where the FinTechs are and who is doing what here. So if we think about like nice to have, you have somebody like Tink. FinTechs, in fact, often are on this nice to have. So you think about Tink, they started out with categorization, and it was cool. You go in and you kind of could see things categorized for you automatically. But then what? Then what are you going to do with that? So it's not surprising that Tink realized that as a B2C, this was not going to ever be a great business plan. And then they converted to a B2B business by selling banks this ability, which was a very, very good pivot. Another FinTech in this category would be like Mina Technologies with Mina Schenster, which originally was a B2C app where you could, let the bank, let your customers would let Mina Schenster log into your bank account, and then they would go and they would look at your subscriptions, and then they would find you better subscriptions. Again, a really nifty service, absolutely really, really nice. But if you've done it once, you're kind of done. You're not changing your bank in order to do this. And so Mina Schenster has also switched to providing that business for banks rather than trying to be a standalone service. If you think about value drivers, obviously all of the kind of FinTech lenders are trying to compete on credit pricing. If you've got Nordnet and Avanza, who are of course original FinTechs, who have been driving margins down in the wealth management area. And if you, one interesting example I really like in the value driver area, because people are so conflate digital and technology with success, is Marcus, which is Goldman Sachs started a retail bank. It hasn't hit Sweden yet, but it has opened in the US. Can't remember how many years ago now, 4 years ago maybe, and in the UK. And originally they didn't even have an app, so they launched without an app, and I think that they got an app maybe at the beginning of this year, late last year. But in the meantime, they offered high interest rates on deposits, and they were wildly successful. I think they got $50 billion worth of deposits in their first year or two. I think that they're up to something like 70 billion now. And so here is where a value driver trumps everything else. It doesn't matter that, you know, they were barely digital. People went to them anyway. And then we have delighters. So a good delighter is actually Klarna, right? So Klarna was solving a very specific problem. They were solving a pain point where when you're on the internet and you're trying to shop, you don't want to take out your card, and sometimes your card doesn't work, and it's just that extra 3 minutes, or maybe having to get up off the sofa and walk across the room is just too much, and you just abandon your shopping, you'll do it later. So Klarna solved that pain point in a really great way, and that's the foundation of the huge payment business they have built up. But in the countries where, when they first launched outside of Sweden, actually that original product doesn't work as well, just because of the way you have to credit score, the availability of data and fraud in other countries. You couldn't really do it the way you could do it in Sweden. And, you know, they had a really hard time having any traction. So then they had to, again, pivot and start doing kind of regular payment processing in order to gain traction outside of Sweden. So, yeah. I think that to sum up this part, if when banks are thinking about what they should do, they really need to think about where are they going to put their efforts. Are they going to put their efforts in nice to haves, which are great, or are they going to put their efforts into things that really make a difference for their customers and really drive loyalty for their customers? So if you don't have all the time in the world and you don't have all the money in the world, then clearly you want to pick value drivers and delighters when you're prioritizing. But having said that, sometimes nice to haves are actually building blocks. So you could have a building block which in of itself wasn't maybe that great, but was something that you had to do on the way to building something great. So categorization could be something like this. So categorizing your payments in of itself, it's pretty minor. It doesn't really help, but if you do this in a good way and you maybe add the ability to add on other accounts and you do some kind of good AI, then you can maybe start really helping nudging people about like when they could save, for example. They could analyze how they should balance their savings with their spending. So real kind of financial advice, and that might be a delighter, while just the categorization alone would be only nice to have. But the thing is that you only should do those nice to have builders if you have a strategy. Like if you have a strategy to build it into something more substantial. If your strategy is just, I'm going to put in categorization and then I'm done, then you haven't really achieved anything. So it's very important to think about what is your long-term strategy for what you're trying to build for your clients. Okay, so we've heard a lot about partnerships, I think, between banks and FinTechs, and we're very pro here at PA about partnerships. We think that that's really important, and we think that's important in order, if you think about the previous slide where we're talking about these categories, you know, clearly you can, if it's easy to plug in a FinTech who's already built some of these things, rather than building it yourself, then you can maybe have everything. You can have the nice to haves and the value drivers and the delighters. And so partnerships are really one way to give your customers everything. But you have to think about your partnership strategy, and you really have to think about creating win-win situations where both the bank wins and the other partner wins, so that both sides have to make money, basically. And I think partnerships are very hard for universal banks in this area, because you're always worried about cannibalizing your own income, your own loans, and so forth. And so you really have to kind of change your mindset and be very clear about what you're trying to achieve with your partners. So we see 3 general partnership strategies. So first, you have things where there is someone who is just clearly superior. They have the technology, they've driven down their costs, and you just, without investing a huge amount of money, you just cannot compete. And so you just let the partner do it. So an example of that would be, for example, TransferWise. So TransferWise is a UK FinTech that has built their own foreign exchange marketplace, and they're great at foreign exchange. And so you see that a lot of the neobanks actually have just plugged in TransferWise to allow their customers to do cheaper FX. And that's a good strategy when you have a player who is so clearly superior in that area. Then there's other things that maybe you could do if you wanted to do, but they're outside your core competence. So you really aren't interested in building out into a new area. So an example of that would be for like accounting. In integrating accounting packages for your small business customers. Certainly a bank doesn't want to sit there and be building accounting systems, so it's much better just to let your clients plug in to other accounting systems, but facilitate that and make that easier. Tink actually would be in this area where Tink's specializing is data and data manipulation, and so plugging in Tink modules to allow your your clients to connect their other accounts, to make payments from their other accounts via one app, all those things. Tink is building that, and you should just buy it from them or from one of the other players that does that, like Plaid. And then finally, you have a balance sheet. So the big banks have a big balance sheet, and they really need to leverage their balance sheet more than they do. A great example of this is Marcus, again by Goldman Sachs. So here they are. They've opened this retail bank. They have gotten $70 billion worth of deposits. So what are they doing with it? Are they focusing solely on selling loans via their Marcus platform? Well, yes, of course, they're doing some of that. But more importantly, they're doing deals with other people. So they are behind the Apple credit card. They have just done a deal with Walmart in the United States in order to provide small business loans to the sellers on Walmart's e-commerce site. And they are bidding for GM, the car maker. They have a credit card, and they are bidding to actually buy all of those customers, looking toward the future when, for example, we might be sitting in our self-driving cars and we can shop on the internet, and that's all integrated into the car's infrastructure, for example. So instead of just trying to grow a loan book organically, they're doing that, but they're also making really big deals, leveraging all those deposits they have, and to be in all the places their customers are. And it doesn't really matter whether it says Marcus on the card or Goldman Sachs on the card. It can say Apple. That's fine, because it's still Goldman Sachs who is going to get the margins on those loans. So if you think about winners and losers here, incumbent banks have 5 really big strengths to leverage. They have their balance sheet, so we've talked about that. They have their huge customer base. They have a trusted position. They have stability. They have all this risk and regulatory compliance and know-how. And finally, they're profitable. So these things, all of these things are things that FinTechs wish they had, and banks do have them. So sometimes it feels like, you know, banks are chasing FinTechs rather than FinTechs, and that FinTechs are taking the lead rather than the banks. And it's a little bit of an oxymoron, considering that banks are, you know, profitable, which is really, really good. All of these things are things that banks could be leveraging more. The balance sheet we already talked about, but yes, they have this large customer base. So who would like access to this customer base, and how can they give people access to this customer base and charge for it, right? So instead of saying, no, we want to block FinTechs and protect our customer base, why not expose your customer base to all these other services and say, okay, you can connect up to us, but then you're going to pay us every time you access one of our customers. So you have to kind of switch your mindset about your customers. Your trusted position and stability. I mean, this is kind of, if you will, the gold asset that banks have. And this is a hard one, because banks have to be careful. They have reputations. They have to be careful about what they're doing, because they can endanger their trusted position and their stability. And so they have to move slower than a FinTech does. Absolutely, and that's fine. But that trusted position and stability is also valuable, and people are willing, again, to pay to be able to access some of that. And so that's a valued asset that banks can use to, in fact, make more money for themselves by, if you will, selling that to third parties who want to use it. Risk, regulatory, compliance, know-how. This is actually one of the areas where we see as the FinTechs are maturing that they need to work harder at, where they're not as good. And so banks have this because, you know, it's sort of in their DNA. They've been regulated for so long, so they know how to handle it. But this is a little bit of a double-edged sword for banks, because they, especially today with, you know, all of the risk of money laundering, the negative news that has been around, banks can find themselves having risk and compliance driving their business instead of having their customers and helping their customers driving their business. And so and this is also where technology actually is holding them back a little bit, because their legacy systems aren't really quite good enough to handle the kind of digital demands actually that regulators are increasingly wanting from their customers. And then finally, banks are relatively profitable, and that is great. But in a way, this profitability is a little bit of, again, a double-edged sword, because what do you do with those profits if you're a bank? So the status quo right now is, of course, that a bank wants to return profits to their shareholders, because that's what they've done for years, and that's what's expected from the banks. But if you think about why you pay out dividends, well, if you're a growing company and you are trying to acquire market share, you're not paying out dividends, you are reinvesting that money. And you're doing that because you think that you have opportunities to use that money to grow, and that you can use it more effectively than just giving it back to your shareholders. And so generally it's mature businesses that give out dividends, because they're saying, well, we're already mature, we're already, like, we've already done our growth, and so now you shareholder, you take the money back, and you can invest it in something else. And so here is where banks almost work against themselves, because if today you're not aggressively going for growth and reinvesting your profitability into technology, into new businesses, then you're really just static. And if you're static, then you're kind of dying. But it's a big conundrum for banks to both please the stock market and to reinvest this money in growth. But I would argue that they need to start thinking for growth and not just moderate growth, but big growth. But only when they kind of change their mindset to do that will they really be able to keep ahead of the game. So to finish, I'd say I think that when you're thinking about customers and what they want, customers actually don't care about having a digital bank. They just want a better bank. And part of being a better bank is being digital, but it's not all about the digital. And so if a bank starts to flip their viewpoint toward how their customers think and how to satisfy them, then I think we'll get some better banking, and we'll have some win-win situations for both FinTechs, banks, and consumers. So that's it.
Thank you very much, Lan-Ling. That was extremely insightful. Thank you for sharing all of that information and for your tips and tricks. I'm sure that gave us a lot to think about. Also, our banking participants in the audience. I was thinking, where do we put our efforts to satisfy our clients? That's something obviously that we all have to think about. And mixing that with the thought of the new normal for business. I mean, everything is changing, so we need to be agile and change accordingly. And I'm thinking staying with your ear towards the railway, as we say in Swedish, is probably a good thing to do. But it was extremely interesting, and I know that there are a couple of questions and we are running out of time. So maybe Emil, you have one or two that we might have time for.
Right. Thank you so much, Lan-Ling, for your presentation, and thank you everyone for joining us today. We did receive a question just now from Anders Jakobsson from the First AP Fund. And Anders, if you would like to ask your question straight to Lan-Ling, you are now able to unmute yourself. If not possible for you, I'm happy to read it out loud. Which I might just go ahead and do that. So Lan-Ling, one of the questions we received is, can you please touch upon how you would advise banks on the balance of selling access to their customers and keeping the trust you said was a great asset? Or do you think customers will not realize the bank sold them to someone else? How about banking discretion? Thank you, Anders, for that question.
Yeah, that's a really, really good point. Banks obviously have to safeguard their customers. What I think here is that it's not so much that banks are going to sell their customers as they're going to offer their customers choices. And so they're going to say, here's our platform. If you want to plug in this app into our service, you can do so. And then when they plug in, then the bank gets a fee for that. So it's more allowing customers to choose who they would like to partner with, but also with the partners allowing them to plug in and charging a fee for that. So it's not really about selling your customers and kind of going, here, you take them, and we're going to take a fee for that. It's giving your customers choices.
Oh, perfect. And that also adds on to the next question, right, from Fredrik Björkman of SEB, Emil. I think he wants to be unmuted.
Yes, Fredrik, you're now able to unmute yourself. If possible. I think we have time for one more question and a perspective. Fredrik, are you able to unmute yourself?
No, it does not work.
It seems
he
it's
says.
not working.
So maybe add the, you have the question, Emil?
I do. So thank you, Fredrik, for submitting your question beforehand. The question, you did touch upon this, Lan-Ling, but the question was, is it really an either-or game in the perspective of who will win, fintechs or banks? Does one have to win, whereas the other side has to lose?
And also on the aspect of partnership, I was thinking.
Absolutely. I'm absolutely a big believer in win-win situations, and I don't think banks have to be the losers or the fintechs be the losers. I think that both can win. I think that if they focus on their individual strengths, that we can make situations where both win. Absolutely.
Oh, perfect. Great. So I think with those words, I would like to thank you very much, Lan-Ling, for a very insightful presentation. And I hope if anyone has any further questions, we can connect you with Lan-Ling. And will you be able to share this, the PowerPoint? Should anyone have any wish to see it again? Otherwise, you can all see it through the recorded film that we made during this presentation.
Yeah, unfortunately, I can't share it just because of the film in it.
Sure.
But we are writing a report, and we actually have more film, more material from our study. And so if you are interested to know when that comes out, then link in with me, and I'll of course be publishing links to all that stuff as soon as it's made public.
That's lovely. Thank you so much. And we hope to see you all again on the 8th of October, navigating the COVID-19 workplace. We're also offering a hybrid event on the 15th of October, a breakfast, where 10 of you could come and meet us, and the rest of you will be on a digital platform to listen to the UK-EU exit endgame on the day of the final negotiations, as far as we're aware. On the same day, a little later, there's a countdown to exit by the SEC in the UK. So lots focus on the EU exit going forward for all of us. So thank you very much to Lan-Ling and PA Consulting, and thank you everyone for listening.
Thank you, everyone. See you. Thank you, Lan-Ling.
Thank you. Bye-bye.